Hello everybody, I'm Josh Korick, and this is your Blue Edge Energy weekly market snapshot. Remember to follow us on Facebook, check us out on LinkedIn, and watch more videos like this on our YouTube channel, as well as visit our website, blueedgeenergy.com. So let's jump right into this. We have a lot of things to cover this week. The current prompt month, now November, natural gas price is trading at $3.07 per decatherm. Now that's a change of 23.2 cents up since last week alone. Now the month we're in October right now, if you remember back, rolled off the books at $2.10 a decatherm for what we're sitting in. And we look ahead to this next winter, and it's coming up fast. The November to March strip price is trading at $3.25.4 a decatherm. This is a change of 5 cents up since last week alone. The winter after that, the strip price is at $3.17.7, which is up 4.2 cents from where it was last week. Now, if we look at the 2021 calendar strip price, now assuming equal volumes again every month, we're resting at $3.09 per decatherm. That's a change of 2.4 cents up since last week. And the 2022 calendar strip price, $2.75, up 5.4 cents since last week alone. So everything's up since last week. Let's talk about storage for a minute. When we look at the EIA storage right now, this week settled at plus 49 BCF into the ground injection, which is slightly below where they expected it to fall for this week. Now this puts our overall inventory at 3,926 BCF, almost at the 4 TCF mark. That's 345 above last year and 327 BCF above the 5-year average. And we think locally for cash out, and that's important for this month. When we look at physical gas in Chicago, it jetted up 65 cents to $2.72 since last week alone. And for our friends in the western part of the state, northern natural gas is $2.71.5 a decatherm, up 66.5 cents since last week. Can anybody say that winter is upon us here in Wisconsin? Speaking of which, let's talk about the weather. The Wisconsin short-term weather forecast is calling for most daily highs to be near 40, with the overnight lows near freezing. So the furnaces are on. And I talked to my mother up north today. They've already run their snowmobiles out and everything else, and today they got a bunch of freezing rain. So she may want to start looking at a condo in Del Boca Vista, Florida, Phase 2 complex or something. I'm just saying. Meanwhile, on a national 8 to 14 day national forecast, for the folks on the western part of the country in Florida, they'll have a bit of above normal temperatures. Not good for them, right? While the rest of us here in Wisconsin and in the Midwest are going to be colder than normal in the near term. Maybe all of us watching this could split like a beach home somewhere down in Florida, but we'll have to figure out how to social distance. So anyway, let's talk about some commentary that's pertinent right now. The early spat of cold weather and the first snow in the upper Midwest has spurred the November gas contract to new highs this week. Even while much of the country, like for example in St. Louis and Pittsburgh, areas down south a little bit, are still in the 80s. So this early weather excitement showed on the board today, as you've noticed in the pricing. We're up 23.2 cents, and we closed out Thursday at basically $3 on the nose. But the January contract has hardly moved here, and it's only up 0.1 cents. This early sentiment is also reflected in this week's cash market, as suppliers bought up a bunch of gas in the physical market in Chicago and in Ventura, northern natural gas, as the temperatures gotten colder. So over the last 2 weeks, it's moved up almost, over $1 per decatherm in our area alone. Now some more commentary. We're seeing some divergence between the folks at the Climate Prediction Center and the National Weather Service. And the big question is, who has the next month, November, correct? The Weather Service short-term forecast, shown on the graph you're looking at right now, shows November starting off cold. However, the just-released Climate Prediction Center forecast, shown in the graph as well here, is still calling for most of the country to be warmer than normal in November. So I'm not sure, with all this being said, if Blake should pack up his summer cabana wear, his cut-off beer shirts, and his suntan lotion, or if he should keep them out for a warm Thanksgiving. I don't know. So some more commentary. So today, Blake had an opportunity to sit in on an industry conference call with a number of other gas industry analysts today. Now, there are several interesting takeaways to listen to here, Although Blake is still kind of sorting through a lot of this today to relay onto you guys. So here's the first thing. The current trend is for greater LNG shipments, exports, as there have only been a few LNG shipments rejected for November and none rejected so far for December. So that's one for the bulls, gas going overseas. Second, this group sees the U.S. natural gas supply declining by 4 BCF a day this winter, as the slow pace of drilling will not offset the well production declines. So another one for the bulls. Now the third thing, they believe that there will be significantly less demand for gas from the power markets this winter, as higher gas prices will shift about 3 BCF a day of gas generation back to coal. Moreover, they expect industrial demand to be lower than last year, and the bulk of the 30,000 megawatts of new renewable power generation to be online by the end of December to take advantage of expiring tax credits that are coming at the end of the year that are done. But further, this renewables will erode gas demand. So that's 2 factors more for the bears now. So kind of conflicting here of what's to come. The data they presented also refuted the claim by the EIA that we will see significantly higher demand from the residential sector this winter, as any increase from the residential side is probably going to be offset by the commercial demand being so low due to COVID. So the big issue with this discussion is that the data seemed to presume that there was not going to be any significant impact from this pandemic on this winter prices, and they failed to even answer the question regarding that particular topic during the call. Now, if this pandemic is as bad as many health experts are now kind of warning all of us here, and then not addressing this scenario in the pricing seems unthinkable. Now, as you likely know by now, outside of figuring out what to expect from Old Man Winter this year, trying to figure out the impact of this pandemic on this winter for all of us here in pricing is quite a variable in this overall collective book we've got. So this is a long one for this week, but we thank you for tuning in. If you have any questions, reach out to Blake or myself, email or phone, you know how to reach us. And on behalf of all of us, Karen, TJ, Blake, myself here at Blue Edge Energy, have yourself a safe and wonderful weekend. Take care.